Earlier this week, Bloomberg reported that commercial real estate sales in the first half of the year were about 1/4 of what they were in the previous 6 years. For a developer's view of the market, we are joined right now by the president and founder of Blesso Properties, Matt Blesso. Matt, thanks so much for coming in. When you were on with us last fall, you said commercial real estate is in this state of extend and pretend. Do you see anything different now, 9 months later, that's better or worse than that view?
Not much has changed. I think the big change is that what we all thought was going to be this flood of distressed assets hitting the market has actually really been a trickle. And banks still have this sort of kick the can down the road mentality where rather than selling distressed debt or foreclosing on it, they're modifying and extending these loans. I think the surprising thing is that they're not, in many cases, extending them for 3 to 6 months, but 3, 4, and 5 years in the hopes that the overall economy is going to get better.
So years instead of months in the hopes that they don't have to write down a loss or just swallow a loss. What about financing? Any difference 9 months after?
It's certainly not the way it was in the boom years, but there's significantly more financing available now than there was 9 months ago. For example, we have recently purchased a $17 million portfolio of commercial and hospitality assets in Fire Island Pines, and we weren't sure if we were going to be able to finance it. We had, it's a seasonal asset. There's a mix of real estate and operating businesses, so it didn't fit neatly into a lender's box.
So were banks freaking out because it's not a pure play?
Well, banks largely did shy away from it, but we did have 5 non-bank lenders that gave us quotes, and we ended up financing it with a group called Progressive Credit Union at a reasonable level of leverage.
So the private money is still out there, even for deals that are not pure plays?
You know, if you have a deal with good fundamentals, people are willing to commit capital to it. And I think, you know, the even more amazing thing is that construction financing has come back to some extent. We have another deal in the market right now where even just a couple of months ago it would have been unthinkable to get a construction loan, but it's got good fundamentals, and we're looking for reasonable leverage, and we've gotten quotes from several banks.
Signs of life, and you mentioned that $17 million property. So this strikes me as mid-size. Is this a healthier part of the market than the behemoth properties?
There's a few behemoths that have been financed as well. The last time I was on your show, I know you had Sam Zell here, and he's had a couple of major closings that he's financed since that time, as well as a few others have.
So is it good to be a gorilla then?
Well, you know, he, for example, purchased a residential portfolio from Macklowe a few months ago for $475 million, and he bought it at what I believe is a very attractive basis. And I think that speaks largely to the size of the deal. When you have a deal of that size, there's only so many groups that can really bid and get that done. Whereas in, you know, our scale, if we're bidding on a deal in the, say, $5 to $50 million range, there's far more people out there that are competing with us.
So more competition. So if Sam Zell can get something financed for a $500 million property, he's going to be one of a handful of people who can do that. We made the turn right now, just in the conversation, to residential. As far as the Big Apple goes, are there still areas holding on to value? Where do you think the market goes?
You know, I think the Big Apple has really fared a little bit differently than the rest of the country. At the end of the day, this is still New York. There's still a lot of people that want to live here, and there's still a great deal of concentration of wealth. So the market for apartments here has really picked up significantly in the last few months, and I think a lot of buyers have the mentality that things have kind of gone down as low as they're going to, and so maybe now is the time to get in.
Especially for some of the higher quality areas. Yep. Matt, thank you very much. Matt Blesso, developer both of commercial real estate and residential real estate. He is the founder of Blesso Properties.